watching Stock Watch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Grant Nader from Benguela Global Fund Managers and Mark Toit from Oyster Catcher Investments. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, gents. Mark, it is the day before D-Day. We've got less than 6 hours before the clock strikes midnight, where it will be the 1st of August. And Trump has said this is a hard deadline. But a lot of countries have not reached an agreement with the US, including South Africa. Is that what we're seeing in the rand weakness today?
Perhaps some of the rand weakness today. I mean, it is a known factor, so it would be, I think probably the rand weakness was more due to other factors. I mean, we also got a rate cut today, so that potentially could also be a bit weaker a bit of an impact on the rand, because we're now paying a lower interest rate on our currency. But yeah, I mean, I think South Africa is in a difficult space when it comes to negotiations with the US. So we are a very small economy. We don't matter too much to them. And we kind of get what we're going to get. Hopefully we can negotiate something better than the current proposal, but we wait and see. And if not, South African industry is going to have to adapt and to sell its products into other parts of the world. So yeah, it was a bit of a difficult period for us, but I think that South Africa will be able to sell its products into other markets should the US persist with high tariffs on us.
Yeah, and actually, in terms of that adaptation, we have had the government saying that they will help certain industries expand markets outside of the US export markets, but also maybe come up with some tax incentives, particularly for the automotive and agricultural sectors. But yeah, of course, we'll get more information tomorrow and maybe in the coming weeks. How are you feeling ahead of D-Day, Grant?
Yeah, I'm a little bit nervous. I don't think we have a reason to be optimistic given the general undercurrent of negativity towards South Africa within Congress and with Trump, whether it's misinformed or not. But it is also disappointing that we're now talking about looking for other markets. AGOA has been under threat since even before Trump got elected. This is not something that happened yesterday, now that we're facing D-Day. So I think we're very far behind the curve. We have been with international relations when it comes to the US, with finding other markets. The government needs to get their act together and help the corporate SA to sustain jobs. I mean, it isn't a great situation. It does worry me.
Yeah, indeed. Well, let's take a look at some of the questions that have come through. Grant, as you're talking about the situation not being great, the situation has not been great for Sasol until, I guess, more recently. The question goes, the climate change pilgrim has been preying on Sasol. How much would be the cost to Sasol investors, or should one sell Sasol shares instead of buying? Firstly, I want to delve into this climate change thing. I mean, that hasn't been the only thing, right, Mark? Because, I mean, a lot of actually challenges have come from Sasol's own goals, haven't they?
Yeah, I mean, climate change isn't the only thing impacting Sasol. Sasol has been dealing with lower oil prices, and one of their main products is turning coal into energy products, which is closely linked to the oil price, the fuel refinery and the like. So low oil prices has been a headwind for Sasol. Also a stronger rand, because at Secunda in particular, they sell their products priced in dollars, so a stronger rand means lower margins for them. They made this big investment in their Lake Charles cracker in the US, and it's a big chemical plant. And at the same time, many other businesses invested in chemical plants across the world. So chemical prices have been depressed. And Sasol also took on quite a bit of debt in that process. So it's sitting with a large US debt that it needs to repay. Chemical prices are at cyclical lows, so they're not making the money out of the cracker that they hope to make. So they're in a tough space, and on top of all that, they have the negative press from their emissions from Secunda, South African government has carbon taxes, which Sasol has to pay. So yeah, it's difficult for Sasol, but most of that is already reflected in the share price, and that's why we saw the Sasol share price go all the way down to 65 Rand a share, and has subsequently recovered a bit. Yeah, well, I mean, we look forward to the latest set of results, which will be out soon, and they need to deal with what they can control. So they need to increase production out of Secunda. They need to right-size their offshore chemical business and see it through the cyclical low part of the cycle. And then if they can do that, I think their share price will recover.
Well, from what I remember, the market didn't react positively at all to its latest production figures. I mean, the question goes then, should one sell Sasol shares instead of buying? And a lot of people have actually been buying. Our technical analysts have been telling us that that chart is at an accumulation phase where the smart money is coming in. Grant, what would you be basing your decision on whether to sell or to buy at this point?
It's a good question. I mean, it was a lot easier to say, and I did when we had the show, we said around 65, 70, it's a buy, because it's just cheap enough.
Yeah.
It's not quite as cheap now, but it also hasn't shot the lights out. I think you need a little bit of faith in stability and upward trend in the energy prices and the factors that move the needle for them, because it's not coming from operational improvement. That's still, few and far between. But I think your risk reward is still on balance in your favor. So I don't think it's a dripping roast here, but it probably favors the buy side, given its still relative cheapness, and given the uplift in global commodity prices that might bode well for energy to follow, and chemical prices, ultimately other commodity prices. So,
okay.
And of course the technicals, if they are supportive, that doesn't hurt. So have that timing. But again, I'll say it again, I don't think Sasol's a buy and hold. You don't buy it and say, I'll just leave this to my kids one day. You buy it and you watch it. If it gives you a nice bounce, you take your money. If it starts to roll over, because oil's going back to whatever, don't ride it all the way down either. I think it needs to be an actively managed position. Let me put it that way.
Okay.
Because there's not a lot they're doing themselves that's in their control that they're doing right.
I mean, it makes sense because as much as there are a lot of people who invested during COVID and they got that really, really heavy share bump, a lot of them did leave, did take their profits and do stuff with the money that they made. They didn't stay. But I guess now there's obviously the other half of the investors that we're hoping for maybe, 500 Rand on the share price. All right, let's go into paper and packaging. Mondi, and of course I knew there would be a question on Mondi today because we saw that share plummeting over 10%. They came out with interim results and the question goes, is there hope for Mondi? Mark?
Yes, so share price really came off a lot today after they reported their results. They missed their EBITDA, what the analysts were expecting from the EBITDA earnings number. And on top of that, when we looked at the graph on their capex in their slide deck, you could see that their capex is actually going to be a bit higher than what we expected next year. So that means cash flows that you're expecting next year are going to be a bit lower. And we also, on the call, the CEO and the management team, you could see that the outlook is uncertain, and they can't actually say things like, it's going to get better, because at this point they're not sure that it is actually going to get better in the short term. Having said all that, they do have great assets. They've got additional capacity which is coming online, which should ramp up. And then any kind of improvement in the macro environment in Europe will be great for Mondi. So that is the reason to own the share. But in the shorter term, it just doesn't seem like there is that kind of pricing support. And I think that the share price, possibly just goes sideways for a bit until we see a better picture for the paper and packaging sector as a whole.
One analyst made a very interesting point as well with Mondi that there was optimism when they sold the Russian business. I think investors got a special dividend, and people thought that with this kind of overhang gone, then the company would be in a better position. Is this Grant just continued disappointment that it hasn't really found its feet even after that event?
It's a tough one. As Mark said, they're actually operating in it's quite a competitive space in Europe, and the pricing support just hasn't been there. The inflationary effect is faded. They're not getting that uplift because the macroeconomic outlook hasn't yet picked up from the ground up. So it's tough for them. This is a good management team. They are very good allocators of capital. They've done a good job over a long period of time. But we cannot forget it is a cyclical business. And that cyclical trough is quite prolonged at the moment, probably longer than many guys expected. I think it feels like a bit of a value trap at the moment. What they're going to need is to see some uplift come through in that macro environment or in the pricing environment to help them, monetize some of that capex. So I think you need to be patient with this one. I don't think it's a stock you need to worry about, but you do need to, I think, have that patience because I don't see it turning the corner anytime soon, given the current environment.
There's a question that just came in, and the subject is more about Sasol. Sorry, gents. And it goes, will the fact that the Lake Charles project sits in the USA be advantageous for Sasol in the crazy tariff environment? Any takers? Any one of you, gents?
As far as I know, the most of the product from Lake Charles is exported, so I don't think it's quite that simple to say that the tariffs will be good for that part of the business. I don't think it's like if the product's exported, it's probably pretty similar. Maybe they get some sort of benefit from product that they sell locally, but I think by and large it's not a great positive for the business.
Yeah, it won't really move the needle on anything. All right. Well, let's get into hospitality and gaming. Please, can you cover Tsogo-san gaming? If I remember, Grant, isn't it the kind of laggard at this point, or one of the laggards in the hospitality industry?
Yeah, they have lagged. And look, I'm not super close to it, but what I can see, or what it looks like to me, is they haven't got the online gaming component right, the way, Sunbet and the way Sun International has. And that segment of the market is absolutely pumping.
Yeah.
I was in Cape Town Airport yesterday, and I can tell you the Sunbet, well, I think it was Sunbet or Betway, one of those things.
Yeah.
It's just everywhere. Like there's a lot of money getting thrown at those things. That's been a big driver of growth. And then, of course, you need to have a properly relevant property portfolio with, relevant gaming assets, etc., physically, which is otherwise you're not going to get the foot traffic because the world has sort of moved largely online, and you need to really be a draw card. So I just don't think they've got the right mix of assets. I don't think they've invested enough potentially. And then, of course, also the gaming, the online side, I think they're lagging there. So, they seem to be lagging the peers, in my view.
It's so interesting that at the airports, the big advertisements you'll see are for the gaming companies and the financial institutions, your asset managers.
Yeah.
Asset managers and banks.
Correct. Was wall to wall.
That should be studied. All right, Tsogo-san, Mark, and it's quite an interesting point that Grant makes as well, that in a pumping industry, this online gaming, they actually took a very big hit in their last results. So yeah, Mark, I don't know, would you be considering Tsogo-san at this point?
Yeah, so I guess that they are struggling because of online gambling, and it's not just their own gaming stocks. I mean, online gambling is having an effect on other businesses too. We heard a famous brand saying that it's hurting their sale of food because people aren't eating out as much.
Yeah.
And it is, it's sucking a lot of money out of the economy. It does look like it's quite cheap, and typically the gaming stocks do well when small businesses do well, strange enough, in South Africa, because people with their own small businesses like to go to the casino on the weekends. So I think if you start to be a bit more bullish on SA macro, I think it could be a nice turnaround story, but we're not involved in it yet.
Yeah, I actually saw that article as well with famous brands. I think it was in their statements, annual statements, where they said that they're losing money because people aren't eating out. I'm like, thank goodness I'm not into online gaming because I love eating out.
Yeah.
All right, let's go into Reunert. Please ask your panel about the merits of a reasonably long-term investment in Reunert. This is one we haven't spoken about in a while. Grant?
So it's cheap, very cheap. In fact, it's not a bad little business, but they are dependent on the macro, the SA government using that infrastructure plan of theirs and rolling that out. I think if they start to get traction in that, so if we see movement from the government that, you know, much of this conversation actually materializes, these guys could be well positioned for that. In the absence of that, like most other SA industrials, it's very, very tough out there, and they're going to remain cheap until there's a catalyst, and that would be a meaningful improvement in the macro or some kind of deliberate government delivery of, you know, of that infrastructure. So that's where so you could probably invest a little bit in that, but you need to understand what's going to happen, what you need to happen before you're going to really see those returns, I think.
All right, Mark, your view on Reunert?
Yeah, similar view. I mean, I also I think for us if there's excitement about South African economy improving, typically the larger cap stocks move first. So you'll see things like Bidvest start to go up, and then once those stocks have gone up a bit and they start looking a little bit less attractive, then investors look at the small and medium cap companies, and they tend to run afterwards. So yeah, I think as part of a balanced portfolio, I think Reunert is fine to hold. It's probably going to be a little bit pedestrian, but you know, over time you'll probably have a reasonable return out of it. I don't think it's going to shoot the lights out in the short term, though.
Something that did not shoot the lights out today was InBev. It was the biggest loser, down about 11%.
It did shoot the light out. It was the pool light.
Yeah, actually, you're right. Yeah, actually, context. You're right. What did you think of that? I mean, considering the fact that they did beat estimates on profit, and just basically why those volume declines were the thing that investors held on to, Grant.
So Heineken also delivered below poor results, and that stock was down about 8% just a few days ago. There's a real question being asked here. Is this declining alcohol volume a structural shift in the way alcohol is consumed, or is it something that's going to pass? And I mean, this is a real question that's being asked. The answer is not that clear. The consumption patterns do seem to be changing. And of course, how are these guys going to grow? You know, they're looking more and more like a tobacco company where you lose a little bit of volume every year and you manage to capture some pricing, and so on balance you grow a little bit, and then you got to hopefully see operational efficiencies and get some extra margin, and you're a mid-single digit grower for the rest of your life. So I think perhaps the stock has had a good run, a reasonably good run over the last 6-8 months, and I think it's even now had been pulling back, but probably still more than that was in the price than what we saw today. And you know, to get excited about a stock growing in low single digits on the top line and maybe mid singles or whatever on the bottom line, or even high singles, you don't want to overpay for something like that. And I just think it's a repricing of the outlook and the unknowns around these alcohol stocks.
Yeah, it's actually quite interesting. Mark, your view on InBev?
Yeah, I mean, like you said, the market is a bit worried about the volumes. Interestingly, the volume pullback was more pronounced in China and Brazil. So I suppose you could ask the question, you know, is this a bit of a revolt against US tariffs? I think that, you know, it is a strong business, and although there is concerns about consumers' tastes changing, or, you know, maybe they're moving away from beer into a slightly healthy lifestyle, or maybe they want to vape a bit more. But I do think that you know, this is a very well-placed, large business, great cash flows, and there will be a buyer for this type of investment. And now that the price is down 10% today, it's looking a bit more juicy. So we are going to take a good look at it now. Yeah.
which is fascinating because it seems that, I mean, Grant, we were talking about AB InBev maybe at some point starting to look like a tobacco company, but British American Tobacco looking like it's making moves for a little bit of a comeback. Yeah. Your take?
Well, what they've got, what the tobacco companies have, which the alcohol companies are actually with their alcohol pops are moving toward or trying to reposition for, is next generation products. So the smoke-free products, FSPs, SFPs that you're seeing, and really the roadmap's been laid out by Philip Morris. If you look at Philip Morris in the US, their smoke-free product is now over 40% of their earnings. And it is material, it's higher margin, and it's higher growth. So it's now offsetting that slow growth, declining combustible traditional business. BTI, British American Tobacco, is way behind the curve, but there is that roadmap, and that component of their business is faster growing. So you can see a way in which 3, 4, 5 years from now, they start to look like Philip Morris, which is growing revenue in double digits and earnings in double digits. So that starts to look a lot more attractive, and I think the market's woken up to that. It's done well over the past. It's been a while now. It's been grinding higher, and I think that people are sort of pricing in that some of that potential as well in that opportunity. So the alcohol companies have got to figure that out. They've got to figure out what's their next gen product. If alcohol consumption is declining, they need other products, and if it's just a shift in taste, they need a position to capture that shift. So these alcohol pop drinks and flavored drinks and ready mixes and all of that, and they are doing that. But if the net alcohol consumption pool is not growing, that's the challenge.
Okay. Well, gents, let us get to your stock picks for today. Mark, where are you seeing opportunity?
Yes, so tonight I'm picking Afrimat. It's a company that we like. We really like the management team. The share price did very well last year, got up to 71 Rand a share. And then with the consolidation of their latest acquisition, which was Lafarge, you could see the earnings or the losses being consolidated there. The earnings were a little bit disappointing. And the share price has come all the way back to 42 Rand a share. And I think going forward, you're going to start to see Lafarge, the turnaround story in their cement business. I think that the earnings will start to come through, so you'll see earnings growth. They've got their iron ore mining business, which the iron ore price has been quite well supported at around between $90 to $100 a ton. Plus, you've seen coal prices return a bit, and they've got an anthracite mine, which their product is quite tied to coal prices, which also had some operational issues, but I think will be better going forward. Yeah, and I think that steadily the earnings will increase, and I think it potentially gets back to 7 Rand a share over the next 3 years. And if you put that on an 11 PE, which I don't think is demanding, that's a decent return from 42 Rand. So that's my pick tonight.
All right. Well, Grant, what are you hoping to get returns from today?
So I'm playing a little bit safe. I'm leaning into quality. I'm a little bit concerned about the frothy environment, not in SA necessarily, but globally. There's a lot of this, meme stock mania, dash for trash, some of the absolute rubbish that's doubling and tripling, and it does ring alarm bells. And so I think, I'm looking at something like Outsurance, which to me is a high quality business. It's a fair price. It's not a dripping rose, but you can definitely hold on to the stock. They've got a great runway for growth in Australia. They're still very much a challenger there, but they've got a good track record. They're growing well in that market. They know what they're about. SA, they remain a very strong player, and then of course they've got the Irish growth avenue, which they're deploying capital into, and so that's going to start contributing to returns in the next 2 or 3 years. So you've got a very good business, a very good management team. You can understand where the returns are going to come from, and you can see the organic growth path that they've got. So that's the kind of company I like in this environment, and that's my pick, Outsurance.
All right. Well, thank you so much for your time and for your analysis today, gents. Really appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Grant Nader from Benguela Global Fund Managers and Mark du Toit from Oyster Catcher Investments. Up next, The Close. Stay watching.